Yo, what's up YouTube? Welcome to a new video. We're going to talk about the time frame alignment model. You've seen me use a lot of examples on Forex, but does it actually work on Nasdaq? And today I'm going to show you how we called almost every single low of the week and low of the day for the past 2-3 weeks on Nasdaq. I'm going to give you a couple of tips as well on why price sometimes does not go below New York midnight opening price for your daily profile. I'm going to show you how to use lower time frame ranges with higher time frame ranges. And all in all, this will just help you understand the time frame alignment model so much more. So you know the drill, hit the like button, subscribe and comment if this video was helpful. Otherwise you go bald. You don't want to go bald, just watch the video. Alright guys, let's break this down. We're going to go all the way from the higher time frame down into the lower time frame and into the intraday sessions. So first of all, we've got the daily chart over here on Nasdaq. Before you start trading any session or any day, you need to be aware what side of the curve are we on the higher time frame. So you want to determine your higher time frame order flow. So what do I mean by that? It's simple, just two arrows. That's the only thing you need to know. Are we in a downtrend? Are we most likely forming bearish candles on the daily time frame, or are we actually forming bullish candles and drawing towards old highs? You got to ask yourself, what point in price do we actually reverse from? So I've marked out sell side of the curve over here, and only when we know the smart money reversal has formed, we can look for buy setups. Now, I prefer to have a low risk buy form first in a market maker buy model before I start looking for higher prices. So what you can do is wait for a short-term low to form and running a lower time frame range as well. And then you trade the distribution phase. So this entire leg up here, this is what we're actually going to break down because we called every single low which formed in this leg up on the higher time frame. And then we're going to break it down on the lower time frame. So here's a call. Of course, I want to include these Discord calls so you guys know I'm not just picking random examples and we're actually trading what we're seeing over here. And let's start off with this 4-hour chart on Nasdaq, because it all starts with a low risk buy and then we go into buy side of the curve, right? So what you want to do, first of all, determine your drawn liquidity. We've just determined on the higher time frame, we want to aim for that sell side of the curve high. So this is the high where the sell side of the curve started. Then we have a reversal over here. And now we're going to actually look for continuation purchase. This is very, very important because these are lows that get formed and form a new distribution phase on the lower time frame. So over here, I've marked out a couple of them. You can actually see this low down here gets rated, right? And then we have another low here, gets rated. We have another low here, gets rated. And then up here, the last low that gets rated. And these areas is exactly where you want to look for price to reverse from. Now, you might think these are just random lows you picked because there's also a low here, there's a low here. Maybe even this low over here. Well, that's a good question because you only pair up these lows with a higher time frame key level or a PD array. So what we always want to do is make sure that that low hits a key level once it gets purged, right? So this is a breaker over here. Actually, it's a mitigation block. I marked it out as a breaker, but it is a mitigation block because we did not run sell side here. So we gotta consider this as a mitigation block. And it pushes up and then we have an actual breaker here because price took out sell side liquidity, and then this places up higher, and then we have another key level where price purges a low, another push up, then we have a fair value gap over here, also a PD array which you can use as a key level, and then lastly for the last push up towards the highs, we have another level here which is an order block and a fair value gap. Now let's zoom in a little bit on the 1 hour. Because how are we actually going to catch these entries, right? We know where we want to look for buys, but you also want to know how can I actually get in and what is the most probable area where I should get in. Because you can't just randomly buy an old low. It has to be in a context and a narrative. So what we're going to do is pair up the higher time frame ranges with the lower time frame ranges. So that's exactly what I also explained in my free course, right? If you haven't watched the course, there's a playlist on my YouTube. So go watch that if you are failing to understand what I'm about to break down here. This is literally from the free course on YouTube. So we have this sell side of the curve over here. Same thing as we did on the higher time frame, right? The daily time frame had a sell side of the curve. Now the lower time frame has a sell side of the curve and a buy side of the curve as well. So where do we actually want to get in? Ideally, we wait for a low risk buy to print first, and then we trade the distribution phase that comes out of it. Now we determined this is sell side of the curve, just like we did on the daily time frame. Bullish, right, buy side of the curve over here. And it's just that simple. You just gotta find kind of a V-shaped kind of schematic, right? Because that's a market maker model. It has an original consolidation or a target where you want to trade towards, and then you have a smart money reversal. A smart money reversal is cleaner if there's a V-shaped reversal, because if it starts to consolidate, it's always less likely to keep to reverse, and then it's gonna make it a little bit more difficult to trust the lows that form there. Now, how do we determine that we're actually going into buy side of the curve from this leg down? Because we have a bearish fair value gap here as well. So we might as well just go down from that bearish fair value gap in premium, right? Now, this is why I like to wait for a low risk buy to print, or at least a violation of sell side of the curve. So you need to pick out a range on the lower time frame, or on the sell side of the curve rather, and an area which should not get violated. So this area over here should not get violated. Why? Because we have displacement, right? We have a couple of up close candles which also hit previous up close candles, so this should hold as a range altogether. But we ran the sell side, and now we're forming bullish arrays and keep pushing up higher. And then the most important part is how you trade a market maker model, also explained in the YouTube series, right? You need to use sell side of the curve to form new PD arrays on the buy side of the curve. So we actually got that over here because we pushed through and closed above this fair value gap. So now you can use it as an inverse fair value gap, and you can actually see the down close candles get formed here, and then price pushes up with another displacement leg. So the highest probability trade area is in this circle over here. Why? Because we waited for sell side of the curve to be violated, right? So, and we're confirming that with the displacement, we're going into buy side of the curve. So this leg over here is an easily traded leg towards the buy side of the curve. Now here, another call out. Of course, I'm going to include those so you guys know we're not just picking random examples. The call out from the MMXM trader over here. And we're going to focus in a little bit on the lower time frame because we want to pair up higher time frame ranges with lower time frame ranges. You can pair them up on the daily. You can pair them up on the 4 hour. You can go to 1 hour, 15 minute. I don't really like to trade the 1 minute or the 5 minute, but I've seen a lot of people use this as well in this sequence. But you guys know I like to use the 4 hour into 1 hour sequence, or the 1 hour into 15 minute sequence. So what we got over here, first of all, we have our draw on liquidity. Now we want to know where can we buy below an old low. So we're basically turtle soup traders, right? Now when we use daily profiles, a lot of times we want to trade with a classic buy day. That's the money profile. That's my favorite daily profile. But we need to manipulate below 12 a.m. EST. Now in this occasion over here, we did not do that. So if you can answer that yourself already right now, then you're very well on your way of understanding what price does, right? I'm going to focus on your attention here because we ran a short-term low with a fair value gap. And this is also a continuation purge, but on a lower time frame. So now when London session starts, it has no willingness anymore because we already purged a low here. So if there's SMT on that low as well, it makes it even higher probability. But this is the reason why price doesn't go below 12 a.m. EST sometimes. And you really got to understand and just trust that those lows will hold. Typically with NASDAQ, you want to trade AM session or PM session. I do not prefer to trade London session with indices. So we're going to focus on New York session, obviously. You always look for a lower time frame range into a higher time frame range, right? So the drawn liquidity up here is a higher time frame range. And we're going to look for a lower time frame range over here, which is the order pairing high to order pairing low. So you always want to pair up a low where you can buy from below. And if it happens in a key time, that's also important, especially if you trade a lower time frame. You want to use AM session or PM session with NASDAQ. Why is this low good? You always want to pair it up with a higher time frame level, right? In this occasion, we're using the 1 hour fair value gap. There is our key level. So don't pick any random lows if you're trading and you think that's order pairing. You need to pair it up with a key level. And that key level has to be in discount if you are a buyer. Right, let's go to the next example. We're going to break down the entire leg here because we called every single low in this leg, and hopefully this entire video will help you on your way as well to determine that yourself for the next coming weeks. So here another one, right, into the volume imbalance, draw on liquidity. So we're zooming in right now on the volume imbalance. This is going to be our key level. Now, what do we want to do when we have a key level? We want to have a smaller range, right? So why do we call this specific volume imbalance for higher prices? You gotta find your ranges, right? The ranges are very, very important. If you're not doing order pairing, you're doing yourself a disservice, and you're just lacking understanding of how price will move from sell stops to buy stops and vice versa. Price trades below New York Midnight Open. So we got a classic buy day profile, aka the money profile, right? This is the profile we always want to trade. Manipulation below New York Midnight opening price, and then continuation for the rest day. How do you actually catch an entry here? So we have the order pairing low over here, right? And order pairing high. That's the ranges we just determined. Now, how do we get in without buying below the low? Because the TAM model, right, is trading and buying the lows on order pairing and into key levels. But let's say you did not catch it. This is a trick you can use to confirm that you're on the correct low where the price should go higher from. You wait for violation of sell side of the curve. So everything moves from market maker model to market maker model. So we can have a lower time frame market maker sell model, but a higher time frame market maker buy model, right? And we can do the same thing over here with a lower time frame market maker model. So we have a market maker buy model over here because this is the original consolidation. But in the end, it was also a market maker sell model before it went to the order pairing low. So you really got to determine what side of the curve are we on. This is the most important aspect. You want to always trade with order flow and aligning time frames. That's the time frame alignment model, right? You want to align all your time frames, and then it's a high probability setup. So let's say you missed a buy below this low. Let's say your limit was on the CE of the volume imbalance, for example. You can wait for lower time frame confirmation. Now, what is a PD array which is very strong when you wait for confirmation? That obviously is the breaker. The breaker needs to run sell side liquidity. Price needs to ideally displace through the breaker. And then you can actually use this PD array. This is the unicorn model from ICT, right? It's a displacement with a breaker. So it's a fair value gap breaker combo after it's run sell side liquidity. So this is another, you can blend multiple models with the time frame alignment model, because again, like I said, if you missed the entry, you can use a different type of lower time frame entry model to catch the move anyway. All right, let's go to the bigger picture. This is from this week. Yes, this is from this week because we're in 5th of May. That's the start of the week, so that's Monday, right? So that was this week. And see how I caught the exact fair value gap where we dropped from, and how we caught the exact buys up here. Then we skipped Wednesday because we had FOMC. We don't want to trade with FOMC, or at least post FOMC you can trade, but not, I don't like to trade before FOMC and federal funds rate release. And then we had this one here over where it was Thursday. We caught this buy all the way to the highs, and then we took a loss on Friday. So I'm going to break that one down as well. So it's not always winning. You always take, you can also take a loss. It is not 100% win rate, right? It's all probabilities. But the context over here is order pairing low to order pairing high. That is the context, right? You can use this on the high time frame again, and you will use it on the lower time frame to find entries as well. So this is my call out, right? From the 1 hour fair value gap down below the low I just marked out. I'm gonna break it down why I picked this exact fair value gap to trade lower from, right? Now, when the week starts off, ideally you manipulate lower on the weekly candle, right? To create that bottom wick on the weekly, and then the distribution phase comes afterwards. You can use weekly profiles to determine what is low of the week. And for me, I was thinking about a Tuesday, maybe Wednesday low of the week, because we want to take out this low before we trade higher. It's unlikely that Monday is gonna be a big move after we already had an expansion phase. So now, why is this 1 hour fair value gap a good area? We have to go to the lower time frame, right? But now we're on the 15-minute. We have the range high and range low. Now, in this occasion, the range low got purged first, but that is totally fine. And let me explain why. Because you could draw out this line and put it on the low here, because this is still the low below the key level, right? So this is important. It has to be before the key level. You could also argue this is a double purge, right? Which makes it even higher probability that we're going to trade lower from this fair value gap. Now, why is it high probability? Because first of all, we fake out sellers. Then we induce the buyers because they think, well, we ran a low and now we're breaking the high. So we're still in a bullish trend, right? So this makes sense that we're probably going to go higher from here. So we We purge both sides of the curve here, and then we drop it. So always use the ranges with narrative and context. So day of the week was not lining up for a bullish push, so we expected to trade lower. Now let's focus on this low over here. And this actually hits the order pairing low, so you would expect that we're gonna go to the order pairing high after we purge the low, right? And this is where I see a lot of people make mistakes. So yes, this could be the low. There was SMT on the low as well, but you gotta think about the economic calendar. The next day, we have FOMC and federal funds rate release, right? There's this day over here. Now, I was not comfortable with these lows being present, even though it's a purge, but it still looks like relative equal lows, right? And then one simple thing, this is very basic and you should never forget it, premium and discount. Never forget your premium and discount, and look what FOMC does, right? We skipped Thursday or Wednesday here, but FOMC delivered it into discount. Now this for me made it higher probability after it done that and broke up higher with a displacement that we could easily look for buys on Thursday. Now that doesn't mean we cannot look for buys after this purge. There's still an opportunity to look for buys because you guys know the concept internal range to external range and external range to internal range. That's exactly what's happening over here, right? We have external range purged and then we have an internal range liquidity pool up here. So that's still a trade setup in itself, even if it doesn't deliver to the order pairing high. And you can actually see the call out here over here. We have a sell side liquidity taken. If there's an hourly CSD, we will be watching for a 15-minute fair value gap to send price higher. Now let's break that down, right? We've got the 1 hour CSD OB down here. This is where the low got purged. Now you want to see a 15-minute fair value gap, right? Going back into discount, and that it would be your trade setup. Just to outline the internal range liquidity pool, that's over here, right? So we're trading from external to internal range liquidity. And if I zoom in on the 15-minute, I marked out that 15-minute fair value gap the MMXM trader talked about, right? And even if you entered in this fair value gap, put your stop on the low, this is still a 2-hour trade to the internal range liquidity pool, which is the bearish fair value gap, right? Down below New York midnight opening, very choppy, but this is kind of to be expected with pre-FOMC, right? This is the day before FOMC and the federal funds rate. But this was a trade setup in itself. And you can see over here, right, colored a little bit outside of the 15-minute fair value gap, but it still hit the internal range liquidity pool. Right, now let's go back to the bigger picture again, where we ran this low. And now, where do you actually want to look for a buy setup? We want to have a key level, right? We want to have lower time frame ranges to pair up with, and then we can look for a trade setup. So here's my call out. Got a lot of red lines on the, because I used the indicator new day opening gap, right? But this is the low where I want to buy from, because there's a key level below the low, and that's a high probability. And if it pumps higher during London, I will reevaluate. And you can actually see that this is the low, right? And it did go higher during London, but it did not take out the range high. So they're actually creating relative equal highs up here. So I was still confident that we could look for a buy setup after we ran this low. So what you can do with a time frame alignment model, you can just literally buy this low, or you wait for lower time frame confirmation. In my opinion, it works better on NASDAQ because it moves a lot faster with AM or PM session. Here's the key level, right? 1 hour fair value gap. We want to trade higher from the key level. It's in discount of the range. Also important. Never forget about your premium and discount. And now we're going to go into the lower time frame. This is a 5-minute time frame. We got that order pairing high and order pairing low I marked out earlier, right, on the 15-minute time frame. And we have the larger range order pairing high. So this is the terminus. This is the target that you want to aim for. And we hit the key level. And then here's my call out that we're waiting for the 5-minute CSD. And then it should deliver price higher. And you can see after the CSD happened over here, it just pumped up and took out all those highs. So that's a clean setup in itself. Right, so let's go to the last one. This was a loss. It's also interesting to break down the losses because we can learn a lot from losses. Let me show you what Trump said here in this candle, because initially I was looking for a 1 hour fair value gap over here because I was still confident there is more buy side liquidity to be taken. He announced that there is going to be an 80% tariff on China, and price moved up and down very violently within a couple of seconds and purged all the buy side and sell side in a smaller range. Initially, I dropped in the Discord that I was not interested in AM session. In hindsight, I should have kind of stuck with that, but I thought it was still good for a half risk entry to look for more long, so we still focused on it. And I'm going to break down why this was still a solid setup, especially on the lower time frame, because we had this purge, right? This is the Trump announcement over here. Then we ran a sell side. Then we formed a fair value gap here, and now we formed SMT during a key time, right? So everything here was lining up for a buy setup. Fair value gap respected. Should be a strong low with SMT and relative equal highs on NASDAQ. The highs on YM or US30 were even more cleanly, like they were almost relatively equal. So there was a nice target for buy side liquidity. This is exactly what we did. So what we did is wait for the previous hourly low to get run on YM, which is US30, and that formed the SMT, right? We're still respecting bullish arrays, swiping highs and displacing higher. Then we saw another fair value gap form and a CSD-OB. So I literally just bought the CSD-OB, put my stop on what should be a strong low with SMT, and then we aim for 2R to finish off the buy side liquidity here. It ran 1R, so if you're a 1-to-1R trader, I guess you could have got a win. But I don't take 1-to-1R. I like to do 1-to-2, 1-to-3. Yeah, this just failed to take out the highs. There was no SMT on the highs either. So I was still confident this should run higher. It did not. And in the end, then you take a loss. But you followed your plan, and that's the most important part about trading. Following your system and applying proper risk management. So you made it to the end of the video. Make sure to like and subscribe if you liked the video and it was helpful. And if you want to have more help and guidance, obviously you can always hit that link in the description if you want to be guided by us. And I wish you all a great day and see you in the next video.